Welcome back, investors, to Ticker Time News. I'm Adam, and Spotify is taking a tumble even after the company reported Q4 earnings with a double-digit EPS beat and a really nice 24% year-over-year revenue growth. Q4 was basically in line with the audio streaming platform's past quarterly growth rates. Its revenue guidance for Q1 merely met analyst expectations, but Spotify has never ever guided revenues above estimates since going public in 2018. So this could come as a shock to investors. What is perhaps the most shocking, though, is Spotify's lack of fiscal year 22 guidance. Okay, before we get too far into the weeds on Spotify, could you smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. That would be very helpful, my friend. Now, Spotify has provided full year guidance in every single quarter since its IPO. So its decision not to issue fiscal year 22 guidance could be scaring investors. Also, user growth has been slowing. In Q4, monthly active users, or MAUs, climbed by 18% year over year to 406 million, a slight slowdown from growth of 19% in Q3 21, 22% in Q2 of 21, and 24% in Q1 of 21. Yet, Spotify is guiding just 418 million MAUs in Q1, representing only 17% year-over-year growth. Adding more premium subscribers is also vital for Spotify's revenue growth. Although Q4's 16% premium subscriber growth year-over-year was decent, it represents a slowdown over the past year. Also, Spotify's forecast for premium subscriber growth in Q1 is not much of a standout at just 16% year over year and 2% quarter over quarter. Finally, let's turn to margins. Spotify is anticipating that gross margins will decline quarter over quarter in Q1 by 150 basis points to 25%. The gradual decline is mainly due to costs that did not materialize in Q4 getting pushed back into Q1. So investors may be shrugging this off. Still, though, Spotify is ways away from its long-term gross margin targets of 30 to 40%. Despite these rough patches, Spotify is still well-positioned in the music streaming industry. Last quarter, Spotify confirmed that its podcast platform was number one in the US. In Q4, the company noted that it continues to see meaningful market share gains, providing good momentum for 2022. Spotify is also looking to make its platform, be it in the realm of music or podcasting, the most inviting for creators, forecasting more than 50 million active creators over the long run, up over 300% from its current 11 million. Advertising revenue also continues growing, making up a record 15% of total revenues in Q4. Overall, Q4's results were decent, but the company's guidance was a different story. With analysts expecting fiscal year 22 to finally be Spotify's first profitable year, perhaps its current troubles are just short-term. Shares of Spotify have gotten sliced in half over the past year and trade at a reasonable 2.6 times fiscal 22 sales. Now, with the overall market in worry mode, I think it may be better to have a wait-and-see attitude towards Spotify given its light Q1 guidance. But once the market hits bottom and investors take on a more risk-on approach, Spotify is definitely a stock to keep an eye on. Well, that's what I think about Spotify's earnings right now, but I want to hear from you. What do you think about Spotify not sharing its fiscal 22 guidance? And remember, your comments make these videos so much better. Smash the like button, share this video, and click the first link in the description for our top 10 stocks list and so much more. Thank you so very much for watching, and I will see you in the next video.